All right, so guys, what we have coming up is US NFP data, and we also going to have unemployment along with wages. Okay, so this print might be a little more trickier just because of what's currently happening regarding geopolitics, right? So just be aware that most likely for this type of print, the best option, I would assume the best option is going to be if we get a surprise beat or a surprise miss across the board. No regular print because most likely geopolitics is going to end up being the main focus for the remainder of the day. And then also remember, it is Friday and we don't know which direction these headlines is going to go. Either we're going to see de-escalations or we're going to see more escalations, right? So that unknown is one of the factors that we have to try to be patient about. All right. So, but when it comes to this NFP print, right? Let's go here. So we're gonna focus on trade scenarios. We're gonna have to focus on the NFP unemployment and the hourly earnings, not just NFP in general. We got to focus on all of the prints. All right, in order for us to take advantage of a really good edge. So the low expectations for NFP is negative 9,000, right? So that's a really big jump to the downside. Very, very big, right? Is it possible? Maybe, right? It's a huge possibility that it could happen. And the high expectation is plus 113. Yeah, well, it transfers. So it's now it's 130, right? But is a very big deviation that we have from the high and to the low. Okay. So it's going to be a tough one to see if we get a massive surprise because the expectation is just a 59, okay? And we already see that the labor markets it's showing a decline, increase, sorry, from last year. So it's showing that slowed process of growth, right? This is what's allowing the Feds to stay restrictive. And in order for us to get a massive, like a really massive print to trade, right? We need to see a big miss across the board or big beat. So unemployment has been steady this whole time, but we could see that the high, right? If we want a very bad print, it has to go above 4.4, right? If we want to miss, right, it has to go. If we want a strong print, it has to go below 4.2. Okay. So unemployment has been steady. The Feds was expecting unemployment to rise drastically. We're just not seeing that yet. Labor data is still surprisingly still strong, right? And then we have hourly earnings, which is inflationary. This is inflation data that they're going to focus on. So we've been seeing uptick on inflation recently, right? But the Feds is already expecting that. It's not new. They're expecting it to be a one-off. They're saying that it's a possibility. This is happening because of tariffs. So higher inflation, right? If we get it like especially at 4%, if we get that high, that beating those expectations at like 3.9 to 4%, drastically high inflation across the board. But if we see that the wages is below that 3.5, we know that inflation is lowering. All right. So very simple. Now, when we looking for a hawkish reaction, right? So that means hawkish, for those that don't know, hawkish reaction is if the data comes out stronger than expected, we see very strong job numbers. This is what's going to allow the Federal Reserve to not rush into cutting interest rates. It's a higher probability they're going to leave rates where they are, right? It's a possibility that rate hike talks could be moving forward. And that happens if we get higher inflation, if we have a resilient labor market. Okay. So if NFP comes out stronger, unemployment is lower, showing that less people are losing their jobs. And if we see earnings is higher, we should expect stronger dollar, stronger yields, right? Gold could push lower and equities might struggle a bit, right? Because equities is a tough one when we're trading the like labor prints, right? Because from a hawkish reaction, equities could push lower as the markets push out rate cuts, right? Because leaving rates high is bad for companies, it's bad for businesses, it's bad for taking out loans, right? It's bad for growth. So equities could push lower initially from a hawkish reaction, but then afterwards we can see equities pretty much rise as this is showing that growth is still strong. Okay, so the best option is usually dollar because dollar is going to react immediately to monetary policy reactions. Equities, right? It could be a little struggle, but from this scenario, because of what we have going on with geopolitics, right, where we got the war situation, is very negative. Were there any negative headlines? Yeah, I think it was Lee. I'll get to that after. But what could cause the best reaction to me for today is possibly going to be a hawkish scenario if we get a strong data print, because this goes along with that hawkish narrative. This we already got stronger dollar because dollar is rising as a safe haven, right? Plus inflation expectations is higher because of the close of the strait, right? So this is increasing inflation expectations, increasing the price of oil, and a higher print could just give us that confirm. So we could trade it within that direction. That hawkish situation is probably going to be good to see if equities could push lower from this print as well. Even though that this is going to show stronger growth, I would rather see equities pushing lower to follow that risk off market. Okay. So second scenario is if we get a bad print, right? If we do get a bad print, I think in order for us to really have a no brainer is if NFP is below that negative 9K, right? If we see that unemployment is rising above 4.4 to 4.5 and hourly earnings has to be drastically lower, right? We have to see a massive low print to see reversals, okay? Because dollar is gaining a lot of strength as a safe haven. So it's not going to be worth trading this print if we don't have a massive surprise, right? It's better to just let the print go by, wait until after 9:30 to like the window is like 9:30 because that's NYSE open, and then wait until probably like 10:45 just so that the volume and the money can start flowing back into the markets and then take advantage of just risk sentiment. Okay. But if we want to take advantage of a really good print, it has to be a print where it's a massive surprise where we're like, oh shit, this is either really bad or oh shit, this is really good. Okay. If not, because of the current context, right? Geopolitics is the main focus. Okay. So that's what we have to really focus on moving forward. Right. So if that makes sense, guys, put a one if it makes sense. Then we're going to look at trade ideas as we have 10 minutes. And here's a screen for you guys. You could just take a photo if you guys want. You can say, bro, I've been in the Forex space for a while. I've never been profitable until I joined this group. It's been a battle, gambling, lost money too. What your advice is on not gambling, greed? I felt like I decided to make more money and pull in, so I start losing. Yeah, man. I'm, I'm glad, man. I'm glad you're listening, Braxton. It's awesome, dude. And you've been here for a while too, man. It's awesome. I'm happy for you, brother. Where are the negative? Most likely because the close of the straight is still there. So it seems like even though that Trump did come out and said what he said yesterday, which I thought that was the reason why I closed out of oil, to tell you the truth. And I'm pretty pissed off about that shit. Because I got in at a really good level, and like you saw, like the profits I made with oil. I'm like, damn, I could have, I should have, like, I wanted to hold on to, like, I wanted to hold on to because I wanted to wait for actual confirmation that the strait was open and not just like what Trump is saying because he just speak out of his ass sometimes. And yeah, like I fucked up. I should have held on to it. Like, it was no reason for me to close oil, but it was a good opportunity. Like gold last night, I got at break even, but yeah, like the momentum is still very very negative, so it doesn't seem like him saying that, oh, Iran is wanting to negotiate. It seems like that's just It's most likely bullshit because right after that they said that they wasn't going to negotiate and that they were still looking to set out a tax. Plus, with the headlines of like those Arab nations is willing to take out investments, right? They're going to pull away investments for the U.S. because of what's going on. Man, that shit is bad for the stock market, you know. So we got a lot of fear. It's still in the markets. A lot of fear is still in the markets. So it don't like that the fact that we don't need nothing new. It's just that nothing got better. You know what I'm saying? So that's really the main focus is that nothing got better. And I think we need a lot more than his word. We need to see if Iran wanted to surrender, we need to hear it from Iran. You know, like that's what we have to really who we have to really hear it from. But yeah, we can't really believe like stuff that he says, and we're gonna get the headlines from Iran too. So even if he comes out and go, oh yeah, they're dying to make a deal, they coming out right after that shit saying like, no, we don't. So that shit is crazy. Yeah, like this weekend might be freaking nuts, man. Like that's why I don't know what's gonna happen over this weekend. Iran, Iran, my bad. I don't know what's gonna happen. Yeah, I personally waiting to turn around and take back that. Yeah, I'm waiting for the sales of oil too. I think you joined a little late. You talked about you got the buys. Yeah, I'm tight that I closed. What do you think about U.S. allowing to buy Russian oil? Man, I feel I don't that was kind of tricky that they went to that route to allow that's good for the Russian stock market, but Russian oil that it's not going to help. Like if he had to tap into the oil reserves, the strategic reserves, that's what's going to probably drop the price of oil. Like I don't think that's going to matter as much from a marketing perspective, like a trading perspective, but geopolitic wise, like that's just opening the doors to Russia. It shows good faith to Russia, but that's like a last resort type shit. I would have figured that was a last resort. So it's kind of weird that the fact that he's not going to the strategic reserves shows that either this is going to be temporary and he's not trying to go to that extent yet. But once he opens up the strategic reserves, right, expect oil to push lower because of that. But I think that's the last resort. But the fact that he's not doing that, I think that's why oil still pushed up. But all right, so we get a stronger print. Expect dollar break above that resistance, right? That could most likely push gold lower, breaking below the support, right? And if we get stronger dollar, right, expect pairs like GU to break that support, EU to break that support, and focus on the yields, right? The US 10 yields should push higher. And then USD JPY should break above that support. And go like Nasdaq should break below this area of 24,760 and US 30 should push a little lower too. But just remember what I said, like focus on price action. We need a massive print. Like the best option for equities is to take it lower if we get a massive miss, like a mega miss where recessionary fears come in place. I think that would be the best opportunity for sales. If we do get a miss in data, right, dollar will push lower. That should help gold push higher, and we should see pairs like GU push higher, and then we should see EU push higher because it's just inverse of DXY. USD JPY should break below that support. And I'm just doing equities in a dovish reaction. Like if we do get a miss and it's not that bad, right? But the markets do expect more rate cuts to come from that. We should possibly see equities push a little lower. But again, I don't like at the moment, I don't like the idea of buying equities at the moment because I personally think the better option is probably going to look for a beat so we could follow the momentum of today, right? Which is just a complete risk off market. So I would rather look for that. I think that would probably be the best option is just if we could get a beat today, we could take advantage of stronger dollar, right? Hopefully gold could push a little lower from that. I would say that to me would probably be the best option. We got Look at these numbers. So you guys, what pairs you guys are gonna look at? I'm gonna look at yeah, I don't like UJ because of geopolitical the risk sentiment. I look at EU, so you get a good one for there. Yeah, I don't like sentiment. The yen, you made 24K on gold. That's crazy, dude. The 20 you mean 24K on gold. I got you. Gold only. Yeah, like just like hopefully we get a really good print if you guys, hopefully we get a good print, guys. Yeah, UCAD sales is a good option. I like that too. Stronger dollar, stronger cat. I mean, yeah, stronger oil helps CAD strength. If we get a miss, I think is a really good pair. If we get a really bad print, but it's a possibility, man. I really don't like this. What everything that's going on makes this print suck. All right, let's see what we get, guys. We got 40 seconds. Yeah, observing is totally fine. You don't have to. You can sit in your hands. It's not really a because after 9:30, I expect the markets to really care after. But yeah, let's see what we get with a print, and let's see that whatever we get new, like a new headline, then I would see that could be like open to opportunities. All right, guys, we got 15 seconds. Go on YouTube for a better view. All right, five, four, three, two, one. See what we get. All right, so we see spikes, dollar weakness. All right, NFP is horrible. Holy shit. But earnings is high. This is kind of like stagflation, right? But I this is horrible. Holy shit. This is going to be weaker dollar. We're going to see probably gold pushing higher, right? Because of that. Yeah, that's a horrible print. And unemployment came out higher too. Yeah, that's pretty fucking crazy. Like uh the yeah, because earnings are higher and that's I feel like the markets is going to focus. This is like stagflation. This is this is a stagflation print. The problem is that earnings is higher, you know, but this should it depends like what the focus would be for the feds, right? Do they care about inflation or are they going to care about the economy? That's a horrible print. Like, why are we getting numbers that is worse than COVID, bro? Like, y'all get that shit? Like, why are we seeing numbers that is worse than COVID? Like, that shit just doesn't make any sense. Like, what he gonna blame the lockdown? That's crazy. Yeah, you took gold. Yeah, in and out. Yeah, like we got time, but to me, I like the idea of equities pushing lower, dollar lower, gold higher. But if the rate cut expectations coming back to the markets, that could push equities higher as rate cut. This is what I was saying, the conflict with equities, right? We could see equities push higher if more rate cut bets start being priced in. And then we could see equities actually rise. That's why equities right now is very tough. Most likely, like, don't worry about the volume yet. It's not NYSE open yet. So this we should see weaker dollar for the remainder of the day. And let's see what happens around 9:30. If we could continuously the direction for the data should be a dovish reaction, right? But what could impact today now is news headlines, right? If we get like dollar, like remember, dollar sells is it's not really a good, easy opportunity yet because dollar strength as a safe haven. But this is a horrible fucking print. This is bad. This is really, really fucking bad. I don't know how he's gonna blame the lockdown on this one. The government shutdown on this one, because this is pretty horrible. Uh, yep, rising and rate cut expectations. I think we should get a dovish reaction. We should get a dovish reaction, but the contradiction of that is we got high inflation expectations. So if they find a way to stop the straight right from being attacked, then the looking for long-term dollar sales, I think that would be the best bet. The only problem is that right now Iran is threatening these vessels from going through the strait, which is going to cause higher inflation. So we have two things going against each other. So this is why, like regardless, weaker dollar, we should see upside on gold. I'm just thinking ahead, thinking out loud. I'm already in EU buys, and I took the gold buys. I hope that this is good, like really good upside for gold now. Like hopefully now this could lead to like intraday buys on gold. I think that would be the best bet. Like equity, I think this should probably be equity sales, man. I don't think this is good at all for the stock market. Just from like a growth perspective, like we got we got the war fears, and then we got a very very bad NFP print. Manufacturing payrolls is bad. Private payrolls is extremely bad, and the revised numbers is lower too. And the revision numbers were lower on top of that. Like to me, this is like screaming that something is wrong. And yeah, the yields are melting now, so we should see weaker dollar. This should help gold. Equities is a tough one, because again, we should either get the dovish reaction, which could help equities push higher. But I think this if this screams recession, then equities are pushed lower. But right now, equities is tough. The easiest one is dollar and gold. But I wouldn't be surprised, like around 9:30, we see equities push lower. Yeah, I put it in the chat for you, the print in the chat. Hold on. And I'll give you guys the update. Yeah, so you can see the print. Yeah, it was revised lower, as you can see. Yeah, this is fucking crazy. This is stagflation. They're not gonna say it. They ain't gonna say it, but we're in stagflation territory. But they're not gonna say it. Yeah, it's just showing the decline, and it's always revision. It's always revised. It's just showing that they're just not gonna really expect. They're not gonna say it. Yeah, this is a horrible. This is horrible. You was right on UCAT. Yeah, UCAT. I don't have it, but I know UCAT is pretty good. Probably is pretty good right now. Gold is moving the best. Dollar is doing well. GU broke above. UJ was a really good option, but I just don't trust the yen. You know. But now we have to wait for the remainder of the day. Now let's see. It's still Friday. Remember, like any news headlines could really impact the markets. Like just expect this to be the direction for the day as long as news headlines don't come out to like dollar could easily rise again because if more escalations happen, right? I would like that to still be positive for gold, and I would still like that to be negative for equities. But for the dollar, right? 'Cause the dollar is also a safe haven, so just be aware of that. Okay, so things could change in the next 30 minutes, an hour, right? Because of news headlines. Hopefully it doesn't. Hopefully it doesn't. But if it does, right, at least you guys know how to maneuver through it. Okay. So expect like let's see if the yields continue to stay lower. Let's see if the dollar could give a little pressure. But the reason why the dollar is a little bit not giving us that aggressiveness to the downside is because like I said, dollar has been rising as a safe haven this whole entire week, so this data goes against that. So imagine the institutions and all the investors that's been buying dollar this whole time. Now they got this print. Now, do they get out of dollar buys? Right now, you have to start adjusting what other asset you could adjust to. So it's going to be a tough one to see where this goes. But I still like dollar sells, gold buys, equities. I wouldn't be surprised if equities like tumble this week, like tumble today, just a huge drop in equities today. I wouldn't be surprised, but just focus on price action. If NASDAQ stays below that 24,700 area, we most likely will see more downside, and also focus on the VIX. So if the VIX continue to rise aggressively, right, then most likely equities is going to start pushing lower. US 30, if it could stay below that 47,600 area, we could see some more downside. TP on gold, what possible? Yeah, good job, man. How many took gold buys? I thought that was pretty. The gold was easy. Now let's see if throughout the day we get more continuations. Like hopefully we could get more continuations. See how you took it? Yeah, good job. All right, guys. So just to give you guys an update, so tomorrow at 11, I know if you guys joined the first call with Carlos, he's going to be giving you guys the topic today. It's going to be the long game with Los. Okay. So every trader, entrepreneur, high performer will face losses at some point in the markets, business, and in life. Right. So we're going to be talking about the difference between those who quit and those who win, right? How they respond to the setback. And it also, E8 Markets is going to sponsor for this session. So we're going to also give away three 50K accounts, trading accounts, three lucky winners that is on the live call. So remember, it's going to be at 11 a.m. Eastern. Hopefully, you guys show up. The first call was really good. It's also on YouTube as well. So I want you guys to show up for that, right? It's all about mindset. There's a lot of you are really, really, really great traders out there. Y'all fucking amazing. But sometimes we lack the discipline and the mindset to help us get to where we need to be, right? You don't need another course. You don't need another mentor. So you already have everything that you need to know. You just have to work. This year should be based off of execution. You need to execute this year. Be your higher self this year. And joining these type of calls could really help you discover your best potential. So I hope you guys show up. All right, it's going to be in a Zoom link. I'll post a Zoom link in my stories as well. Just to make sure you guys be there. Yeah, like do not sleep on these calls. Yeah. Go ahead, BJ. You passed your challenge? Awesome, dude. Yeah, you was like a few $100s away. That's awesome, man. What prop firm are you using? Yeah, like now I just recommend try to get another one, like get another one going. Try to pass the second one and just four oh you passed four of them? That's crazy, dude. Hell yeah. Now oh, you copy traded it. That's fucking dope, dude. Yeah, now it's just hell yeah. Oh, now it is only March, dude. Yeah, you work on that. Hell yeah, bro. Hell yeah. Yeah, things are like I said, they don't want to pay you. So make sure you do timely withdrawals. They don't want to pay. Uh yeah, Chuck. So today's NFP data, the numbers, it was very, very bad numbers. As we could see, the numbers were horrible for NFP. The problem that we're facing is that dollar strength for this week is because dollar's rising as a safe haven, and the inflation expectations has risen because now we're seeing oil prices is rising. If you go to your pump right now, most likely gas has increased as well, right? So we're seeing the effects of the war. The print goes against a stronger dollar. So that's the problem that we're facing, is that this print suggests that okay, there's something, the labor markets is easing, right? This is a very bad number of non-farm payrolls, and private payrolls and manufacturing payrolls is lower, and unemployment has rise too. So this is showing that the labor markets is weak, right? But average earnings increased. So to me, this is more stagflation, right? But the focus is, what does the Feds focus on? Are they going to focus on lowering? Are they going to be more aggressive towards rate cuts now because they want to save the economy? Or the inflation is the issue for them, which normally it is, and they're going to leave rates the same because their goal is to bring down inflation and they're not going to try to save the economy yet, right? So that's the focus. But what's going on with geopolitics, like oil, as we can see right here, like oil is rising aggressively. So the fact that oil is still pushing higher, this is inflationary. So this is eventually going to start being the focus. So until oil change, right, we probably won't see that aggressive selling of the dollar. I hope that we do, like after 9:30, right? We could see dollar start pushing lower, but it's going to be tricky when it comes to this print. So very tricky. This is a very horrible print. I just don't understand like why we're seeing recession, like we're seeing COVID numbers, dude. Like that shit is crazy. Like we're seeing literally COVID numbers in labor markets, and people like that shit is crazy. So they're lying somewhere. They're lying somewhere. I got in gold buys and I'm in EU buys. When will news hit? With like, yeah, Pips, man, you can wait till 9:30. It's fine. Whatever makes you comfortable. Like usually 9:30 is the best bet because that's where NYSE opens. Yeah, typos are crazy. Swiss JPY, just focus on the yen. Like this right now should probably push Swiss JPY lower, but it's not a really a good pair to trade right now because the Swiss and the yen are both safe havens. So like the the Swiss and the yen are both safe havens. So is usually going to lead to more consolidation, right? So it's not really good. Like during geopolitics, like where we got geopolitical tensions and risk sentiment is the main driver. You don't want to trade two safe havens. You want to trade a risk asset against a safe haven, right? So like AUD JPY, you're going to capitalize on the sells this week because AUD got weaker, the yen was gaining strength, like stuff like that. But two safe havens is very tough. You want to take GU sells? Yeah, that's fine. Do what you want to do. That's crazy. It's like having a like you have a fitness trainer that tells you the proper meal plan to have, and you're like, nah, I want to go eat McDonald's. It's like, like, bro, y'all bugging. Nah, I don't recommend it. I mean, it's a tough one. Like, wait until 9:30. Like, wait until 9:30. If you want to be more cautious, like equities is pushing lower, right? So wait until 9:30. So I think we're gonna see more of that risk sentiment, but just wait till 9:30 to be a little more sure. But sometimes patience, you can be overly patient and you can miss on opportunities. But sometimes, like the risk of being overly patient is that you miss opportunities. So sometimes it just depends on your risk tolerance. So if you want to be patient, it's not wrong with it. You know what I'm saying? Like it's really nothing wrong with like waiting until volume comes in. But the data was at 8:30. So now it's like once you get breaks of structure, yeah, like you like once you start breaking structure, so now it gives you the opportunity to take advantage of it. But sometimes when you get those pullbacks and we don't see that momentum, usually that tells us like, okay, it's waiting until NYSE, and then after NYSE, it should be a better opportunity. But remember what I said about the dollar. This is tricky because this is going against what the dollar's been doing this whole entire week. So a lower print, it's like dollars rising as a safe haven. Oil is still like I'm tight. I closed oil. Yeah, this would have been a massive trade, but oil is still rising aggressively. So this is increasing inflation expectations. So this is what helps dollar rise. So this is why I like focus on the yields. Like now I'm gonna let you guys know. So the remainder of the day, Yeah, like oil hits 100, that'd be crazy, right? It looks like it could hit 90. But the remainder of the day, focus on the US 10 yield. Like focus on the yields. If we see that the yields starts breaking back above 40, like 4.17, most likely this is due to oil rising and then inflation expectations is increasing. And then markets is not going to care about the data. It's caring about what's happening with the war. And then if the yield starts spiking higher, this is all about oil and inflation expectations. If the yields start pushing lower, then most likely the markets is caring about the data. Okay. So focus on the yields for the remainder of the day. So that's what's going to really tell you guys the story. All right, guys. So yields is like giving us that reversal, but we won't really know until like around 9:30. So wait till NYSC. And then if we see that the yields come back above that 4.17, then expect dollar to pretty much start gaining strength and recovering, all because oil is still spiking higher. So if oil continues to rise, then just that should could probably tell us that the war is still going on. The problems with the strait is still an issue. If the strait doesn't become an issue no more, we're going to see oil lower, and that's when we can start focusing on monetary policy. All right, guys. So just focus on that moving forward. Yeah, UJ. That's why I say leave UJ alone. No B until 9:30. Yeah, like if you took profits on gold, I think it's good not to be greedy. But let's see what happens after 9:30. Should be pretty good. If AU buys is only, I don't like AU because we still got a risk off market. It's like the yen, you know. So it depends on the yields. Like focus on the yields, and then those dollar pairs would be a lot easier. If the US 10 yield pushes lower, then yeah, AU buys would be a really. I don't like AU buys because Australia, it's not a risk on market. You know what I'm saying? So it's going to be tough trying to trade that. If there's a risk on market, like if the war ends, then yeah, AU buys. But right now, it's not really that good. All right, guys. If you guys are interested in a private group, just make sure you guys just message me on Instagram. Link is in the bio, and we'll see you guys tomorrow for the mindset call. All right, guys. See you guys tomorrow. I'll send the link in my stories. Good job for gold today. If you guys took it. Equities is pushing lower. That's showing the fear in the markets. Right now, dollar is the only thing that's not really reacting as much. The yields are doing good. The dollar is not really reacting yet, but equities is pushing lower. So let's see after 9:30 if dollar could actually react. But good job if you guys took gold and equity sales. VIX is heading towards extreme. Yeah, I think VIX. I feel like equities could like massively push lower today. I'll be surprised if it doesn't. I should have sold the shit out of Nasdaq. I had a good. I had a. It was better to see like dollar. I can understand why dollar is like doing it because oil is just like freaking relentless right now. I'm still in EU. I might have to. I don't want to call. I want to wait until like 9, but I might close EU. Yeah, I don't like EU because look at the dollar and the yields is like giving us a huge recovery in the yields. So this is like showing us that the oil market, like this has started happening too. Like this shit is crazy, and it's like we can't go against that, like we just can't go against what oil is doing. And it feels like that's going to be the narrative today. Yeah, no deal. So that's more market fear. So yeah, Trump is yeah, if the yields spike, then most likely be aware of the possibility of gold pushing lower. Okay, guys? So be aware. If the yields spike higher, like if the yields recover, look to the left. If the yields recover this whole downside move and then dollar starts breaking, be aware of gold pushing lower. All right. But equities might continue to push lower, which is a good sign. But again, I don't sometimes like let's see what happens after 9, like 9:30, because I don't want us to be like, okay, let's now start selling gold now and then gold does push higher. You get what I'm saying? So let price action be our dictator today, not feelings yet. But yeah, let's give it time. Like wait until like 9:30, see what happens. But yeah, this is a risk off market. The Iran war is still a major fucking player. This is crazy what oil did. That means everything he said last night didn't matter at all. Like that means they didn't care about anything he said last night. You know what I mean? That like he didn't say anything to help ease the markets. So that's what, yeah, just be aware, like, because it's not looking good. So now we probably gonna take advantage of stronger dollar. I have a feeling that's probably gonna be the direct, yeah, like a complete risk off market. Because now look at the currency monitor, AUD and CAD is higher because of oil, right? But now we could possibly see dollar rise, the yen and the Swiss is higher. So we could possibly just start seeing just a risk off market and the dollar just rises as a safe haven. I feel like that's the case. And then if that happens, we know that gold might push lower. So then adjusting to those sells might be the best bet. But yeah, so just be cautious. Like we're probably gonna see that. And I don't want us to get bit by that shit again when it happens again. And it happens numerous of times. And I don't want us to get bit by that. So capitalizing on sells on gold would probably be the best bet. I think I missed the reason of why cat is strong because oil. Uh, because in Canada, they Canada their main source, their traded commodity is oil. That's their number one exporter is oil. Yeah, it's in the course too. If you guys missed the course, yeah, yeah, I'm gonna get out of EU. I'm not gonna fuck with it. Yeah, so pretty much the profits I made with gold today, I'm just now break even because of the EU loss. Yeah, I just got out. Like, I'm not in nothing. I'm probably gonna see if gold could end up being a sell. Probably take advantage of the sales because I think that's the best bet. But I'm gonna wait. I'm gonna wait because still now like this is okay, right? When it comes to the dollar, like this is okay. So usually probably like after 9:15, we could really see if the dollar pushes lower. If not, we already know that it's just higher inflation, right? And then now Trump is saying he wants yeah, that's crazy. So this showing that the war escalation is still there. Like now equities is probably the best bet. Yeah. But this goes against what I was first saying, right? That this the war is what goes against the data. And then now, like the best bet would have been if we would have been a higher print, because then a stronger dollar would have led the way. But now let's see. Like the yields still pushing higher, but I'm gonna make my adjustments. Start. We could probably start looking for gold sales. Yeah, the VIX is like extreme territory. I think if we look at the higher time frame, it's probably even. I think it's like, yeah, like look at what a VIX is. Like just in the higher time frames, like we're at that massive extreme levels. Yeah, like it's not like COVID, but we're up there. Now we're up there. I don't think there's no reason to look for reversals in equities. Not when this shit is happening. Yeah, glad I closed gold, man. Shit. Yeah, I'm mad I closed oil last night. That was like a that was just a bad close. That was very bad. That was a very bad close. Because part of me wanted to keep that oil trade open, and I still closed it. And then I entered the sales, and I was profitable, but I went break even. So when I saw the drop, I was like, okay, now the market is focusing on like the opening trade with Russia oil. But now looking at this, they don't give. I think now the main focus is just the strategic reserves. So the fact that he didn't want to open that up probably showed that okay, not enough. Yeah, like when it comes to gold, that's why I don't want us to get bit by that again. Because usually we had this happen to us what 2 times this week where we're looking for the gold buys and it just pushes lower because of stronger dollar, stronger yields, right? So if the sales do happen, that would probably be the best option, and then hopefully that could be the trade for the day. But just still be cautious, because at the end of the day, like you don't want to be over eager for it. Like right now, just stay 50-50 because you don't want to be like, oh, now let's take advantage of gold sales. But then what happens if the next hour dollar does drop? You get what I'm saying? And the yields do drop, so like try not to be very antsy for direction because this could happen and dollar could still push lower. You know what I mean? So that's why it's okay. I took the loss on EU. I don't want to hold it just in case because if dollar just rips to the sky, I'm gonna end up extending that loss. I would rather just like take the minor L and then just like reload up once we get a clear bias. But I feel like most definitely I could be wrong, but if dollar shows bearish price action, most likely it's going to tank. Like, you know what I'm saying? Like, most likely, if the bearish price action shows, once we need to see it break support, we need to see the yield spike higher, then most likely we will see gold tank. But if not, right, let's see if gold, the only way now, 5,100, if it breaks above that high, then let's see if we could clear it above. But if the dollar is still pushing higher and the yields are higher, I'm not going to really trust those gold buys. You get what I'm saying? So that this is going to be a tough one. All right. Iran said they targeted another base. Yeah, Trump said literally f that deal. Like he, why? Where was that energy last night? So it's weird. Uh, Cantor says that Iran war could bring down the economies of the world. Went away. What happened? It says oil prices may see $150 a barrel as the Gulf countries prepare to shut down production. That's crazy, yo. Even if the war ended immediately, it would take Qatar weeks to months to return to normal. Yeah, man, I think oil's gonna take off, bro. I think oil's gonna take off. I mean, he's feeling the pressure. I know for definitely now he's feeling that pressure. Like he can't deny that. And then I think Congress voted against it too. So I know he's feeling that pressure. Yeah, look at gold, man. Crazy. The yields ain't pushing lower. Dollar is still in the range. Like gold could move up and down 50 to 100 pips, which is crazy. But it's not going to really show the actual direction, which is the problem. But yeah, I think this was, I don't know, like if the other Arab nations start pulling out of pulling money out, I think all that shit he worked hard for is like gone, you know? Like all that stuff, money flowing into the US, they just pulling that shit right out. Like now tariffs got impacted. So now he has to go against the United States, the Congress, right? And the courts. And then now if the Arab nation, that's billions of dollars that they was yeah, like that's I don't think that was part of the plan. But like now them pulling out investments, like that's I think that goes against what he was trying to do. Like, yeah, because they have the US bases over there. So they're attacking their nations because they're impact hitting our bases. Yeah, I think the best bet today right now would have been equity sales was probably the easiest opportunity, guys. I think that was the easiest because as soon as it broke structure, it just went. Yeah, I think yeah, exactly. Like Iran, Venezuela was part of the plan to hurt China. Yeah, because now they have better negotiation. They have more. They're better at the negotiation table now when it comes to minerals and all of this shit that they're trying to work with when it comes to China. So Venezuela, I definitely think that was a part of the plan to impact Russia and China. When it comes to their sources, because China had the edge and they didn't want to give up. They wasn't trying to give up any minerals resources, right? So now they go back to the negotiation table because now they can't use tariffs, right? So he can't really use tariffs the way that he wants. So now he had to do another plan. So it kind of shows that they knew what the judges was going to do. And that's why they did that operation in Venezuela, right? Because it's like they knew that tariffs was going to be out the picture. So they had to go to like the plan B and plan C. Like what's in Cuba though? Like that's why I wonder, like what's really in Cuba? The yields is going to be the story, guys. If the yields pushes lower, right, that will be the story. If the yields continue to spike higher, then if the yields do spike higher or the yields stay flat, right, then I think we look for those gold sales. But if the yield starts spiking lower aggressively, then we want to see the dollar spike lower, and then we could look for gold buys. But as of right now, it is looking like markets is very focused on what's happening with oil. Unless this is just like another distraction so that uh so that we don't focus on these bad numbers, right? So the war is the distraction so we don't see the recession. I have a question. I have finding a yield chart on here. Yeah, I don't know why, but all you got to do is press US 10Y in your search and it should pop up. Yeah, like if at 9:30 we could get a minor pullback, like I would probably look at the lower time frames to see if we get continuations to the downside. Yeah, like it could consolidate too. Like it's to me, I don't see a reason for equities to push higher today. This is bad. This is real bad. Real bad. Yeah, because now that they added bets to the rate cuts, I don't think it's gonna matter right now. Like that's the problem. I don't think it's gonna matter right now because the context is about this war situation. So even though that, yeah, like we could see uh like Trump just came out and just said this shit, no deal, no surrender, like make Iran great again. And then he has the initials. This is not him, bro. Like whoever is in control of his social media is diabolical. Like now people are gonna have this hat, like make Iran great again. This thing is crazy, bro. Like this shit just makes no sense. Yeah, but this is the context, man. Like, God, bro. He put that shit right after these bad NFP numbers, bro. Because now it's like like, yeah, like that's the focus. Yeah, he's a wild dude, bro. Like, but that's the focus right now is this. Because like yesterday he was showing de-escalations, now he went against it. So that's the problem right now, guys. Yeah, so see right here, they cutting production to oil fields after running out of room to store its bottled up crude oil. That's crazy. Ah, man. The oil shortage in the Gulf countries is near maximum capacity. It's only been how many days, bro? Like since the shut, what, 2 days? This is already happening. It is only 2 days. Like oil just spilling all over the floor. Like it's not funny, but it's like it's only 2 days, bro. Like this shit is gonna get so effing bad, guys. It's gonna get so effing bad. Man, if they expected oil to hit 150, it probably would hit $300 a barrel. Like it's like you don't even have to think about it. You just buy oil and just let it run, you know? Like that's how bad it could get. Like you don't even, and then imagine if Iran just start blowing up oil facilities. You know what I'm saying? Like, oh gosh, dude, this got to be so bad. So yeah, this could be so bad. And it's only this is it's not even that we're not even that deep into it yet. You know, like it was like 3 to 4 days of it. Yeah, I think we should start looking for those gold cells. Yep, start looking for those gold cells eventually. Yeah, I'd probably take advantage of a gold cells. If it doesn't work, I'll probably just be done for the day. Get my two L's and call it. But yeah, I had a really good week with oil. I should have still held. That would have been like 40,000 right now. Freaking crazy, yo. I don't know why I closed. Yeah, like that was just very ignorant of me. Closing. It's very, very ignorant. Very, very ignorant. Closing oil like that. Because the buys was easy. It was just now it's like, ah, damn. Now you just have to enter in just good faith and just like you know, like it's no real you don't have to focus on price action. You know, like that's the problem with oil. You just enter, just like fuck it. You don't really have to look at price action. But like maybe 930, see a little pullback, but technicals don't really matter at this point when supply is being impacted, you know? It's not a currency, so like you just hope that it just runs. But I don't want to say that and somebody just randomly enters like, all right, bet. You know, you can wait for like a 1 minute or 5 minute order block and see if you get a break of structure, but it just doesn't it doesn't make sense for oil to go back to 80. Nah. But best believe when this situation does end, be all over those effing cells. Be all over it, guys. Yeah, like that just makes it very easy. Be all over it. If those sales opportunities, it's not even gonna matter. You know, like yeah, it could drop to 60 quick. And the crazy part is they're not even gonna wait until a headline come out. They would just know. Like if something happens over the weekend, right? De-escalations over the weekend, best believe oil is just gonna freaking die. You know, like probably hit 55. Like that's gonna be the opportunity, you know, when it's right now from like 87 and the lowest it could go. If it could hit 60 to 55, it may take a while for that to happen, but if it does, and then you just take buys around 50, 55, and just hold it for the rest of the year until something else happens. You know what I mean? So you just catch it, try to catch it at the high, at the peak, and then try to catch it at the low, at that real low. And then you just hold it like that, you know? But I know when the sales come, that's going to be the biggest opportunity. Yeah, we wait until like 9:30, guys, see what we get. like I feel like the best bet, man, is I would love to see dollar push lower, yield spike lower. We take advantage of buys. We finally could buy gold as a safe haven. Like that would just be the easiest opportunity, you know? Like that's really what I'm hoping for. I don't I really don't want to sell gold, man. Like that shit to me just makes no fucking sense, man. But if it sells, it's just the easiest opportunity. But I would like to buy gold because if we could get gold to push higher, it's gonna rally, you know. But selling gold, it's just like you got to wait, let another drop go by, then wait for consolidation again. Like wait for price action 3 4 days of consolidation, and then wait for the break of structure to the upside because we already got it. You know, if I go to like you see what I'm saying? Like we already got the consolidation. We're already at that low. You know, I don't want to wait. We got to wait again. Like we got to wait for a drop and then this type of price action and then wait for a rally. I don't, man, it'd be good if we could just get the buys now. You know, it'll just make life so much easier if we could just get that. You know, the 1 hour, like we got this minor order block here. The 1 hour's breaking structure. You know, we just need weaker dollar and weaker yields, you know. That's why I don't want to judge it so quickly because it's like at least you guys can understand both scenarios, right? When it comes to the dollar, it could rise right now because of what Trump said. He don't want to end that war that's spiking oil right now. We've seen geopolitics is taking over. That's a risk off market. So that's been the direction for the dollar for the week. But this data does support a dovish Fed. You know what I'm saying? So that could start when if that starts becoming a narrative, then oh, Fed rate cut bets is increasing now. Like they're concerned about slowed growth and a weaker economy. You know, if they start selling the dollars, selling the yields, right? Then we could actually buy gold because of that. And then we could use the other narrative of gold rising as a safe haven too, you know? So that's why I think the buys would be the best bet. Like the sells right now is only because the war increasing dollar as a safe haven and gold is traded in US dollars. So that's why the sells is the sells what happens, just so you guys can understand. You know, so it's tougher. Like equities was a lot easy. This showed the stagflation, recession fears, and plus Trump just coming out saying that he want to start shit. So now that's panic selling. You know, so that's really negative right now. But it's tough. It's very tough, man, because we can't say it's a dovish reaction and equities is still pushing lower, right? So that's why I think if we get a stronger dollar, stronger yields, if we see breaks of support, you know, take that sell, take it as a scalp if you like, or take it as a like a break even if you want to take it as an intraday. But most likely, if gold starts selling bearish price action, that's probably going to be the drop for the remainder of the day. But if we can see weaker dollar, weaker yields, and it's like that's the actual direction, and then if gold could hold above 5,100, you want to take that buy and see if we could lead that even higher, then I could see that being a good opportunity too. So it's 50-50 in both directions. All right. But the dovish reaction is sucks because I can't see equities pushing higher. But again, remember, like write it down for your notes because this is a really bad print. This could lead to buys in equities in the future. Just like when I was saying, oh, we're going to be all over those oil sells, be all over those equity buys because now there's when a rate cut talks is going to start coming back in place. So all this selling that we're getting is just temporary because the war ain't going to go on forever. Eventually, it's going to stop, right? So when the moment that it stops and we get optimism, remember this is the monetary policy. So markets is going to go back focusing on monetary policy. So that's when we take advantage of the buys in Nasdaq. We take buys on US 30. As long as like tech is not a big problem, right? But S&P 500, we look for the buys back in that once monetary policy becomes the narrative. Make sense, guys? Yeah, so like don't worry about today and you're like, "Oh man, like I want to trade now." It's just like you're going to get it. Opportunities is going to come. Whereas swing trade opportunities is going to come on monetary policy shifts. So once all of this gets behind us, we know what to do. If all of this is still here, we're just going to see continuations. of what we have so far. So that it's very simple. You know, if this war continues, we're going to see continuations of what we got. If we start seeing the war end, we're going to see reversals. So that's just how easy it is. So you just have to prepare for it. Yeah, you ain't the only one that made a mistake on that, man. Like that shit's yeah, that sucked, man. Damn. Like usually I would say, like profit is profit, but nah, that was a dumb close. It was a really dumb close. I'm gonna be like, yeah, dudes, when he talk, man, I'm gonna just ignore his ass until I see like Iran say something. I'm not gonna listen to him. Like if he says something about the oil reserves, then I'll listen. But everything else, man, like he full of shit. Like, and then the next day oh, we ain't like who said that that Iran wanted to stop? No, no, we're gonna keep going. Like, bro, it's like it makes me believe that he is not writing anything on Twitter unless like he be traveling, he just be talking, and a person just like send those tweets. But it's like it's just very very fucked up, bro. Like he just changes. Like yesterday he was talking about peace. Today he's just like all about the shit. Like he just woke up angry or some shit. He just woke up and just like chose violence. Yeah, he's like that. Like he just woke up and just like mad as hell, bro. He had a bad dream. Damn, it looked like crude could hit like $90 today, which is crazy. It's crazy. Like I could get Bloomberg TV like on Prime. I get it on Prime, but if I play it on the computer, yeah, I can't see it on the live stream. But I would have to like purchase the Bloomberg um website just to get because it's also cool with Bloomberg TV because like you could like when it's Asian session, you could switch it to Asian markets. London session, you could switch it to London markets, but usually it does the updates on its own. And I like Bloomberg articles overall. Like I like their articles as well. I think it's really good reads when it comes to their articles. Like you don't really need all of them, but like to me it's like very good articles when it comes to Bloomberg. Like everything that you need is there. I could try Apple TV. I know I have Apple TV. I wonder if it plays, but like yeah, because like I have to subscribe to get this, so you can see everything that's happening. You see right here, it tells you what's going on. So this is better context, but you just go to economics. Yep, you see, oil spikes feed stagflation concerns. So you see, I'm already saying it over the live calls, but this is what I mean, right? Like, so you could just tap here, you can read the article. It breaks it down, everything that's happening, So I could just purchase it for you guys, and I could just send the articles like that, very easy to understand. Waller doesn't see sustained inflation from, yeah, like what are you looking at, brother? Like, it's like these motherfuckers just be lying, bro. Like they just be lying. You got politics here too. Like that's all it is. It's like you get all the articles you need. Like, but usually we just focus on like markets. You can see FX. And it's like global FX. You can see stuff on Japan 7 hours ago. The Iran war may trigger Afghan currency devaluation, right? Like all that stuff. So you see, like this is it's really good to have. You know, let's see how much it is. I used to have the student plan. Any of you college students could get $10 a month if you're a college student. I think you just need to show ID or something, or yeah, $40 a month just to read fucking articles. Shit is crazy, bro. Yeah, you could do the student plan if that's the case. Tech bundle. I don't really care that much about that. Yeah, I just want like I can see if the Apple TV works. I could sign in on Apple TV. Yeah, Prime doesn't work though. Man, this sucks, man. All right, gold is put. Yeah, so you see, like right now, like gold is higher. Like this is fucking like sorry for language. This is messy because now like I want to take. Yeah, this is messy. The yield's higher, dollars higher, and gold is spiking higher. Right? Very messy. Very messy. Yeah, I don't like that. It's messy. Yeah, very messy. Very messy. I don't like that. That's happening. Oh man, bro. That just came out. Oh my God. That there's another attack on a ship. That's crazy. Wow. Holy shit, bro. Oil's gonna fly. Oil's gonna skyrocket. Yeah, like it's just like it looks good, man, but it's just gold hasn't been rising through any of this, you know? So it's like, why today gold pushes higher and then a news headline, gold rose as a safe haven. You're like, what? Like this wasn't happening all week. Now it's gonna happen on a Friday? Nah, like I'd rather take bets on sales. Yeah, yeah, yeah. Like probably no lie, like probably after this, I should have bought those oil containers, but gas price is definitely going up like to like 4.50, $5 a gallon, bro. Yeah, like take that part seriously because that's gonna suck. Try not to go far over this weekend. But I told you guys, right? You saw the gas prices, right? Like probably the day after. I think I said it was Monday, and then it already increased like 20 cents or something, like 10 to 20 cents already. Yeah, that guy was talking about GU cells, and now I sound like an idiot. Ah, man, yields a spike. Man. If gold don't push lower, that'd be crazy. He says Cuba will fall pretty soon too, so you best believe we going after Cuba too. Oh, he's saying everything that he's gonna do. That's crazy. Oh man, Trump is gonna go after Cuba. Crazy. I'll be surprised if China don't go after like I'll be surprised if China don't go after to Taiwan. Russia try to fully take over Ukraine right now, right? Like I wouldn't be surprised, man. We see stuff like that happen now. He rates war at 12 or 15 out of 10. I wish I could hear him. Is he live right now at CNN? Like that's this dude is crazy. Nah, he's not live. What did Tim Tebow said yesterday? Any of y'all paid? I see like a lot of stuff with him speaking. I hope he didn't say no crazy stuff. Probably did, right? I really don't think. Yeah, right. Nobel Peace Prize winner. Damn, man. Like, I hope, man. I hope this is like, damn, gold. Look, yeah, gold is man. That sucks. Yeah, it's just very messy, man. Very messy. Yeah, oil has. Yeah, it has. Like again, like like when it comes to these oil companies, right? Especially the Saudis, um, they make money. Oil companies too, like they make money when prices rise, and they make money when prices decrease, right? But the more higher it costs, the more money they get, right? But it's bad for consumers, because like we're it's like another higher tax. You get what I mean? So like individually, the oil companies could probably do pretty well. Uh, let me see. Like you see Chevron, like so this is really good, like for like very good for these companies. What's another one? BP. I don't know the initial for BP. Uh, see Shell. See Shell is rising. So all the oil companies is gonna do well, right? Uh, so this is like supply and demand. Fucking oils, gold is yeah. Damn, man. It's like gold moved first. That was the problem, but we still got to see. Like it's 9:30 to see what happens still. But it look like, like I just don't. Yeah, man, I don't like it because it'd be shitty if like like dollar and the yields push lower. I just get back in EU buys. That's about it. But yeah, I just don't want to. I don't want to. It's let's see what happens, guys. Like the yields is going to tell the story. Yeah, so like you can see an example, like all these gas companies is doing well, right? So oil prices is rising, that increases gas price. Oil's rising, that the oil companies rise as well. I just don't know, like BP, Shell. We went to Chevron. What's what is it? Mobile. Uh, uh, I don't know if that is. think it's mobile. I can't find their thing, but yeah, you guys know what I mean. Yeah, yeah, I know what I mean. But at least I get the context. But all like usually all the gas is gonna be spiking higher, all the companies. And Brickshaw Hathaway, man, they eating off of that Chevron share. They probably doubled down on it too with all of this is coming on. But you can see the correlation with the yields, right? So that's the story because it like the yield spiking higher. You can see like how that kind of like the dollar messed it up, like gold recovered, right? So that's why the yields is like the focus. It's not just like it's just an extra piece that you could add to your decision making, so that it could help you make a better choice. So even when it comes to breaking even or taking partials, right? Because we know first we understood the data, it came out. But now it's like before the data came out, it was just a list of those probabilities where it's like, well, probably can't see dollar dropping aggressively because dollar is rising as a safe haven. We see that the war is still going on. Oil is still hitting all-time highs. That's also inflationary, right? So dollar sales probably ain't going to be the best bet at the moment, right? So the fact that we could understand that, but when the print comes out, the print was so freaking bad that it was just like, damn, like it's hard to not want to sell the dollar with this print, right? But the markets show what's more important, So I, I like a dovish reaction, but a dovish reaction means that equities has to push higher. But the war is still going on. Inflation expectations is rising, and plus we have stagflation. I can't really see equities pushing higher just because of rate cuts when we have massive. We're seeing like massive hit in the workforce. So it's like very hard to see equities push higher to confirm a dovish reaction, right? So what makes the most sense is like, okay, well, if we see the dollar rise, then maybe I could probably take advantage of gold sales instead, right? Maybe we should be looking for equity sales. But in order to have confirms, right, of dollar weakness, I need to see the yields melt. And the fact that the yields just recovered this whole entire move and pushed higher, that kind of shows us that okay, the even the markets is definitely focusing on like what's going on with headlines. And look at the dollars, like still struggling to. I mean, gold is still struggling to break out higher. So I don't want us to get caught in taking gold buys again. When repeatedly gold does this again and again and again, and it always pushes lower, and then everybody's like, um, what the hell? Gold should be rising as a safe haven. And you don't want this like to be the fifth or sixth time that you missed out on it. So if we get those sell opportunities, I think that should be the best bet. If it ends up being a loss, then I'll say, man, fuck this shit. Just wait until because equities was most definitely the easiest opportunity, you know, because that's what just makes the most sense. Because I can't see equities rising with all of this. Yeah, like oil should have been like Lambo money. It should have just like got a yeah, you had to pass all your prop firms and flipped $100 account. Yeah, like oil was just crazy. That shit was just like a no brainer today this week. It just took time, like when the initial noise happened, like it looked like they were just loading up in their in their prices. They were just loading up. Like that's what it felt like. They were just loading up. And then it took like a 2 days in order for oil to push higher. You gonna grab a S6 soon? Gonna say oil paid? Yeah, good job, Eddie. But yeah, yeah, oil was pretty easy. Like that was pretty easy. Yeah, I probably go on a vacation and shit, and buy like probably get like a good laptop, do the live calls on the laptop. I like the oil sales. I like gold sales, guys. I think that's like the best bet. Like it's a high risk right here. High risk sells, obviously. If you guys are this is high risk sells, safer sells is below support. Like it depends on your tolerance, right? But I can't I can't see like we still got time, but I personally just can't see dollar just melting. Right, it would have did it already. It'd be weird if the yields is spiking like this, and then an hour later we see the yield spike lower and dollar spike lower. That should be pretty weird. Like I think right now the narrative is higher inflation, war tensions, right? I like to see even if the dollar doesn't do anything. Worst case is that gold and dollar consolidates, right? Because of data, and then we have data, and then we have this problem. But yeah, like I think sales in gold makes the most sense right now because the yields is kind of short painting that story. I need to go full time already. How do you know you're ready? Main account gives big enough extra cushion for profits. Follow the budgeting plan video that I did. Make sure your what is your total bills right now in total, like your needs. What is your this is my first trading like this and it's an amazing experience. I wish it was always be like forgive my man. This is my first trading in times like this and it's amazing experience. I wish it was always be like forgive my manners. Um, I think you said something good. Yeah, but to answer your question, like just do it's about managing how you manage your expenses, you know. You gotta like what is your needs, then go to your wants and your savings, right? So if you could do all three, like how much is your debt? Like what is your debt and how could you lower that as much as possible? Like just so that you can get started and then you don't put a lot of pressure on yourself. So how could you get started? Like the dollar is weird, man. Yeah, like that should be like yeah, that's the only thing, man. Like if dollar pushes lower, the yield spike lower, that would be a huge head fake. Like a huge head fake. But I like the yields is what's painting that story right now. So they still monitor the yields, guys. Just monitor the yields. Monitor oil yields, and let's see if equities do. Yeah, you don't want to get a huge head fake. Like gold is still in the range. So let's see what happens if dollar spikes higher or dollar comes lower. Let's see what the yields do. But yeah, like when you go full time, just make sure that you're like start doing that now. Like even if you're not full time yet and you're trying to get there, like your budgeting, make sure you get that down packed now. Like your debt, like make sure that all of that is you got everything down packed. You could have a separate bank account for your bills, right? Make sure you have a separate account for your savings. Like do all of that stuff about managing your money you're spending now because it's not about the more money I get, then I'll do it. It's not going to be like that. If you can start storing and doing the right things now, then with the more money you get, you could just continue that flow. All right. So that's what matters. And then once you get that down pat, because if you can't manage your budgeting with a job, you ain't going to be able to manage it when you're a trader full time. Because if you're just still pressed about your bills and you're still behind in debt and all of that shit, like as a trader, it's not going to make it better. Unless, like, yeah, if you're making 30K, but usually the mindset there, you make 30K, you're just going to spend 30K because that's just your personality. You see what I'm saying, guys? So, yeah, yeah, more money can fix the problem. It can, yes. But if you don't work on your habits, you're just gonna always be in defense, like you're always going to be in defense mode, like, oh, I gotta make sure I have enough to pay this bill, I gotta pay that, And then it's like your bills was like 4 grand before you already had that mindset, and then now you're making $30,000 a month, but your bills increased to 20K a month. You know what I'm saying? And you have that same mindset, even though you have more money. So that's why it's more important to like focus on that now. And then once you could get comfortable, then with your job, your bills is easy. You're not stressed. You made back them gold losses. Good job. Yeah, like now once you get that alone will start making the pressure starts to ease off, and then the full time comes, then you would automatically make that adjustment. Because if you're trading and profiting and you're working a job, so you got two sources of income, like there's nothing wrong with having two sources of income. The problem is time. When you when you make enough money, you can buy back your time, you know. So that's the benefit, is that you could take back that time. You don't have to go somewhere for 8 hours a day and waste your whole life. Then 2 hours of traveling, hour break, you buy back your time to do what really matters for you. So that's the whole purpose, is buying back your time, you know. Yeah, I could build shit in the house, but I'd rather pay somebody to do it. I'd rather have my time. So that's the whole purpose. But yeah, manage your finances. And then once you got that down pack, then you can start thinking about it. Then you start doubling up both. Like if the goal is to trade full time, like work two jobs, trade, do as much as you can just to build yourself enough cushion, have a separate account where you just never touch, you just building. It's just like, it's not a savings, but it could be a savings, but emergency fund. Just make sure you just get that to where it needs to be, like just in case if the car breaks down or some shit, because there's always going to be some life, always lives, right? So you always have to have that too, so that you could have that safety net where it's like something happens, like the boiler breaks or the dryer fucks up. You have that money to buy that. Work on your credit. So have a credit card. Don't go over 50%. I think it was like 15%. Don't go over 50%. Don't spend half of it. Like try to like put gas in a car. I know gas is like $100 now, but you got a $500 credit card. Try to only spend like 30, 40, $50 and then always pay it back, so that you could increase your credit limit due time, right? And then you could just use that to buy little stuff. So like there's a lot of ways that could help you. So you can have credit on your side. Yeah, look at the dollar now, man. This is what sucks, dude. Because if dollar and yields pushes lower, yeah, like because now if the like because gold is still in a range. Like it's a high risk, but this is why it's high risk. But the yields, like, it could cause gold to consolidate and dollar could consolidate, and that will be a headache for today. You know, so I don't. Yeah, it's tough, man, because like I told you guys earlier, we got these two things that's go like gold could go either way, dollar could go either way, yields could go either way. So that's the focus. It's like which is going to take over, right? Is it going to be the war situation, higher oil, higher inflation, stronger dollar, stronger yields, weaker gold, or this massive miss in NFP, rate cut expectations, weaker yields, weaker dollar, stronger gold, right? So that's the battle we dealing with right now. Which one is going to take over? And you can look at the price action. That's why we're dealing with this. It's like which one actually takes over, you know? So it's a tough one, you know? And it's like gold moves very quick. So you be in a sell, you're down 50 pips, you don't take profit, then it goes back 60 pips. Now you're down 60 pips. Then you close the trade, and then it goes back down 60 pips in your profit. Right? So it's just you got to be patient. Don't just like going back and forth. Just let the markets like show you which direction it wants to go. Yep, sit in your hands and just like don't force it. Just let it happen. The ranges is pretty quick. You're going to be up 50, 60 pips, down 50, 60 pips. You're going to close when you're down 100 pips. Then it recovers, and then you mad that you closed, and it never hit your stop loss. And during this whole time, it never hit your stop loss. It's just that it's just moving quickly in both directions. So yeah, just like try not to overthink it. Yeah, man, it's just take patience. Yeah. Because like again, like it depends on what's like the yields. I feel like the yields showed the story. It'd be weird if like the rest, like the next 2 hours, the yields just drop all the way to like 41, 4.1. Then it's like, bruh, that's tough. That'd have been extremely tough. But then it shows us that policy is more important. But from experience, policy is after geopolitical tensions. Markets focus on policy after. But yeah, it makes sense. Like I hope that gold pushes lower. Yeah, have a good one. But I told a lot of people weaker dollar, weaker yields. So I like to be right. That's the easiest thing. If the yields and the dollar just melts, and then it's just like EU buys and hopefully gold pushes up, and then that would be the easiest opportunity. The hardest one is if like the yields and dollars stay higher and then taking sells on gold. That's normally the hardest part. That's hard. Trying to sell dollar. I mean, trying to sell gold is usually tough. Buying gold is typically easy. So hopefully like I could be right. Weaker dollar, weaker yields, and we just see equities push lower too, hopefully. But the hardest part is like taking these sells. But most likely if gold breaks that support 50, 70, it's probably going to just melt. But I recommend probably take one more trade after this. And if gold ends up being a sell, you take that trade, right? Let's see what happens like after 10:30, 10 o'clock, 10:30. If you take those gold sells, hopefully that be the last trade. If gold ends up being a buy, make that be that last trade. Like make sure you have a good stop loss, and hopefully the yields push lower, dollar shows pressure, and gold could push higher from that. The reason why I like gold buys because I know when that opportunity comes where we can hold on to it, oh boy, you know, that's gonna be a good one. Buys will be a real good one. So hope like that's why I like buys because it could be more of a longer term trade. But if the sells on gold happen, you're just taking that to the downside and still anticipating upside. So like that's why I like the buys on gold. Equities, like I hope that equities don't recover today. I hope it recovers next week so we can look for buys next week on equities. But yeah, guys, like hopefully we could see this or weaker yields, weaker dollar, stronger equities. I hope that we could get that dovish reaction, and then that could be the narrative for the day. That's the most easiest opportunity. If we don't, then it's just market fear, like that would just drive the markets, but then you don't have to trade it, but wait until the de-escalations happen after. Okay? Because when it happens after, then those opportunities would be so no brainers. You're going to be killing it, because then you don't have to really day trade like that. It's just you're just holding equity buys, you're holding dollar sells, you're holding oil sells, you're taking advantage of gold buys, and then that's really it. You know what I mean? You don't have to worry about the intraday noise. So that's just look forward for that. All right, guys. Makes sense, guys. So like, and just make sure y'all put in your notes because it's a lot of information. But soon as something like clicks with you, okay, write that down, so that when something does happen, right, you'll be able to you have the note there. So like now you could adjust accordingly. But this is where it gets tough, like right now it's tough, like because it's ranging, so it's like I don't want to like force a direction immediately, but I want the markets to make sense. So that's why, like, if the stronger dollar, stronger euro, stronger gold, like, that's not what I really want. But then that was this candle right here. Then it just reversed, right? So because it's not all going to be in one direction. Nah, I don't think it would affect oil at all. Like, the only way is if they open up the strait. Like, most likely, if U.S. forces end up protecting the strait, then I think that could cause gold to push low. I mean, oil to push lower, right? Because now that they're protecting it, and then, like, attacks over there is stopping. Then a headline like that, right? They send military forces over there to start protecting the strait. Like, if even foreign nations now, like soldiers, like military, start protecting it from Iran attacks, then I think that would probably cause de-escalations and oil could push lower. That's what I'm waiting for. I'm like, what are they doing? Just like open field day to oil takers? Like, what's going on? You know? So, like, that's what I'll wait for. But at least you guys could see the confusion with the dollar and the yields, right? Like, makes sense. Like, now it's just about, will the markets care about the job markets? So that's what we're trying to see. Because if the rate cut bets is increasing, dollar weakness should take over, and then we should see the yields push lower. So that at least now you could see the importance of just monitoring the yields, right? Because that's what's really showing a clear signal of which direction we should go. So you're not just like just taking random trades and shit. You just have to figure out, okay, what's going to be the story now? Okay, the yield's pushing lower. Okay, the story is more rate cut expectations is increasing. Now, if I see the dollar dropping, I see EU, GU pushing up, right? UJ is pushing lower. If I could start seeing equities push higher, I know it's not because the war ended. Equities is kind of recovering because this is a dovish reaction. So you can see the correlation, right? Because even if the yields and the dollar is pushing lower, right? It, like, if equities is still melting, then it's like, man, this is a tough trade to take. Because, like, everything is not aligning. Even though dollar makes sense, but equity should still push higher, right? Because money is flowing through the markets. So that's where, like, it could be today could be very tough because we're not seeing full correlations, but it's good to, like, I think it'll be good to see dollar push lower because it shows the importance of patience too, and then it shows the importance of how data, especially this type of data, it has an impact in the markets. So if gold does spike higher, like, that's good knowledge to show patience, trusting fundamentals, and trusting the economic data that the markets is still going to follow that, right? It takes time, right? It's about to be what, about almost 2 hours, like, like an hour and a half. It takes time, but it shows the importance of waiting, being patient, letting the markets align, right? And then, like, the data was bad. Inflation was higher, but the data was bad. But Trump, he messed it up because Trump came out right after that saying that we're gonna go to war, and that messed it up. That messed up dollar. It messed up the yields. So Trump escalations caused dollar and the yields and oil to spike higher. So that's what messed up the data. Because if it wasn't for that, we'll be seeing, right, this is what we saw initially with gold from the data, that gold pushed higher, dollar did spike lower, yield spike lower. Then Trump said the headline, and we got reversals. So yeah, that headline is what messed it up. It's not the data. It was just the escalation headlines what messed it up. So now it's like had to wait 2 hours, and then now gold is spiking, dollars showing up, and yields are pushing lower, and it's 10 o'clock. So it's like, it was the headline that messed it up, that made the dollar and gold be more range bound. Was the headline, because now we have two things going against each other. right? And then I think oil just hit 89, man. Hey, look at oil, crazy. That's crazy. And then like now you look at price action, right? We see that price is not breaking lower. We saw that this candle closed higher, and now it's not even it's 3 minutes to 10, and now gold is just spiking higher like crazy. Now let's see if the yields in a dollar pushes lower, and then hopefully that could be the direction, man. I just hope that that could be the direction for the day because I would love to see gold rise as a safe haven. All right, like U.S. forces and UAE air base forces. All right, so what it says? Oh, they targeted U.S. forces in UAE air base and yeah, so they're Iran is still targeting U.S. bases in those countries. Iran might keep doing that too, just to piss them off. You waited for a pullback? Yeah, good job, Victor. Yeah, man, it's really good. It's really good. Really good job. Really good patience. Yeah, it's tough to like make that. I'd rather like take profits and miss out of the trade than to be like you're holding, and uh I mean, if you're in a shit, like it's up to you, like what you want to do. I feel like oil could push higher, but man, if you got some good profits, man, take partials, break even, or just take the win and call it. It's like it's tough, man. Like everybody's saying 150, but the problem is it may take time we don't know what's going to happen over the weekend, and it may take time. But as of right now, I don't think there's going to be no de-escalations, just so we could throw that out. So, yeah, man, like I think if oil hit 90, then it's gone. Like right now, I can't see unless Trump says like, "Oh, we're gonna tap into the reserves," then yeah, get out. That could cause a minor pullback. That could cause a pullback. Fucking yeah, gold is tough today. It's a tough one. Anybody took the gold buys, or y'all being patient too? But yeah, that's a tough one. Besides Victor, it's a tough one, man. Yeah, I didn't want y'all to take like a massive loss. Like, cause if gold would have pushed lower, that would have been the best bet. Patience is all right. I don't mind that. But if y'all took the buys, man, y'all got some balls. You got some that was tough. Yeah, now dollars reacting. So yeah, now I can find that dude on YouTube. Tell him, so I fucking told you. So I tell you, eat steak, you eat McDonald's, nigga. It's like shit. I say like do this workout and you just decide not to do it. Yeah, it's a tough one, man. That's real tough. I hope that Nasdaq doesn't spike higher now. I want Nasdaq to be buys next week. I will look for that. I don't want it to be buys today because then that's just gonna mess up. Like it's not gonna mess up nothing, like but it'd be good to catch a good like to catch a low, like really good to catch a low. Now gold, we just have to see if it holds this area here or we start spike. I can't like the yields. We need to see the yields start breaking lower, like breaking below here. But dollar's pushing lower, which is a really good sign, really good sign that dollar's spiking lower. It's a really good sign. And if oil could start calming down, if oil calms down a bit, like that does help that dovish reaction, because now it's just like if you're in the buys, like, damn, oil's gone. Gold is gone now. That's crazy. But again, like when it comes to oil, just I will always say just take the win. But if yeah, if you got in at like 80 or 70, then hold on to it. If you're in like up here, then just take profit. So you have to deal with that pullback. But it's a possibility that oil could still hold its high. It could still hold that high, but just be aware of profit taking, because that could just cause oil just to recover a bit. Oil is already higher, so it's not like, oh, why oil's not pushing higher any higher. It's like it already did. So just be aware of like it's a Friday also because investors, they're not gonna like it's highly unlikely a lot of traders is going to hold any price action over the weekend because we don't know what's going to happen, so just just be cautious, when it comes to that. Like yeah, like when it comes to gold now, if the yields start flipping bearish, then you're probably going to be a lot safer in gold. And you got in at a good level, and now hopefully that gold could actually continue to give us that bullish price action for the remainder of the day. All right. When it comes to equities, I like this is like a nice break of structure on Nas right here on the 5 minute, right? But the VIX has to like drastically start pushing lower. Yeah, 5092 is a good inch. Yeah, that break of structure here, right? Yeah, really good. That 30-minute break of structure. Yeah, you up a good penny, dude. Because I like NASDAQ buys as a dovish reaction, and if that becomes the narrative, we have to see if the yields spike lower more aggressively. I don't want to play that battle of like risk off market and dovish because you'll be looking for buys and then equities could take another tumble lower. I hope that next week we could start looking for the buys because I don't like the idea of holding over the weekend. That's the only thing. So if equities push higher, like I say that's okay, but I just don't like the idea of holding over the weekend. That's the only thing because we just don't know what's gonna happen. So hopefully, like next week, we could get a better, like way better understanding on like how where this war is gonna go. And remember, it's still only 10. We got a lot of time, guys. So anything could happen in the next 5, 6 hours. Good job, Anthony. What you profit on gold? It's like, yeah, Nas, yeah, awesome, dude. Yeah, y'all doing better than me. Yeah, like I had two losses this week though. Oil was like the biggest trade, so it's fine. Like, but I like oil could have been, yeah, that was just a really dumb close because like usually when you don't make the mistake of closing too early, like you're not entering other trades. You know what I'm saying? So like you're just letting that shit run. Your patience level, it helps you with being more patient with your decisions. So like I would have never took EU. I'd have said like I'm just holding gold. I'm just holding oil. I don't need to take any other trades. Right. So the fact I took profit, I'm like, damn, now I gotta look for something else. Then like and I'm still right. It's just holding on to it, but it's just like gold, I was in the buys too, but I got out, right? But the direction was still right, but the indecision that happened, that's what made me make me second guess it because I'm like, okay, now what's going to be the focus? It's like, okay, if this is the focus, then I can't take buys on gold. I can't hold on EU buys because I got to deal with the strength because of higher oil. But then now you can just see that oil is kind of like it's still high, but you can see if it settles a bit at these highs, we could just see it settle. Then we're gonna see equities reverse. We're gonna like you can look at the VIX. The VIX started pushing lower too in the 5 minute. I could extend the screen, right? You see that the VIX started pushing lower. So it's not a coincidence that everything happened at once, right? So dollar started spiking lower, now gold is higher. So you see the correlation, and that's what matters. You see that correlation. But if you took gold, like, yeah, you're done. You don't have to worry about anything else. If you got oil, you should be done. So if you took sells and equities, you should be done. Like, don't overtrade. Just like take it as is. If the dollar could continue to push lower, that'd be great. Then most likely EU buys could probably be a better bet. But we need to see the yields push lower. If the yields don't push lower, then just call it. All right, guys. Uh, yeah, I'll leave it at that. And I have to put this video up on YouTube, so it's a long video. So give it time for it to load. And yeah, like it's a tough one, man. Like y'all guys made it look easy, but to me this was a tough one to like really trust the direction while you're in drawdown. That was the tough one. But yeah, we see. Let's see if the dollar continues lower. Want to see the yield spike lower. Let's see if the gold stays higher. Let's see if oil stays higher. And then when it comes to equities, I would like to see equities stay flat, like stay pushing lower from that sentiment base, right? I would like to see that happen. I don't want to see I don't want to see equity spike higher today. I don't want to see. Hopefully, we could take advantage of that next week. But then let's hope that over the weekend we could see a little bit of de-escalations. The Nasdaq buys, US 30 buys, S&P buys would be the best bet, and then that most likely be a longer term trade. Oil would be looking for oil to drop as well. All right, then oil, the dollar downside, yield downside, and more upside on gold. So that's what we should be anticipating if we get de-escalations over the weekend. All right, guys. But as of right now, moving forward, let's see if we can see dollar. Still, dollar could flip at any moment, right? If the dollar and the yields push lower, that is because of the data being weaker than expected. That should help gold push higher. All right. If we see dollar spikes up and the yield spike up, anticipate gold to reverse. All right, guys.